that we should be paying attention to that will let us know our rate about to go up or come down?
So one very important thing, I mean, things we track, right? First off is inflation, right? Because treasury bills are seen as like the risk-free rates. So
So are they really risk-free?
yeah, they're risk-free in sense of where the word risk-free comes is probability of default.
Yes.
Okay.
That is probability that these guys won't be able to pay me back my money.
Correct. Yeah.
So now looking at it, or you look at Nigerian revenue, the sources of income, we've seen tax revenue grow significantly.
You see now even our what's it called? Our reserves.
Yeah, our reserves. When you look at
reserves, so
now,
yeah,
I mean,
as a country.
We're now in the range of, I think last time was at 45 billion, was it 48? Yeah, that range. Right? It looks so good, right? And when you look at even duties also are growing. Everyone has to file their LRS, file their tax before. You get it now. So I mean, look at all these things put together. You're like, okay, this government is still doing fine. So there's a very high tendency that they're able to repay these loans they're taking. Also, so worst case scenario is
they will print the money.
So we used to laugh about that thing, right? Worst case, they will go to CBN, inject.
Because it's your legal tender now.
Although that's not advisable because that causes inflation. Now, more money chasing fewer goods, but that's the worst case. They will see payback. That's why it's called risk-free. So that's the first question. So taking it back to what should they look out for? I feel like a lot of things to look. I mean, just a few things. First off is inflation. Don't forget.
How would they look out for inflation?
Thank you. Because sorry to cut you short, because I'm telling you, a lot of people on this court are just going to be angry and say, what are these people saying that it's getting better? Nigeria, what are they saying? Inflation is 15 point, this one, and this one is 16 point. I'm still buying things expensive in the market. So some people are still going to use that to gauge, But what's a more practical way, to look at these things? I think we should let's try and make it as practical as possible.
So I think you should first remove the thoughts around how people see inflation. People see inflation from
only food.
For food, So inflation is like
the first thing that, and I don't blame them because that's
food and transportation.
That's the first thing that hits them.
It touch me.
It touch everybody.
Yeah, exactly. But so inflation is persistent change in prices of goods from a period to another period.
Yeah.
So in the last 1 year till now, we can say for a report that came in for February, inflation grew by 15.06 on an aggregate level. So we use like a basket of goods where there's a food component, there's an energy component, a lot of things come together, shelter components, a lot of things come together to form that aggregate number, right? When we flesh it deeper, we see different numbers. We see, so this is food inflation. But also you cannot be comparing how much you bought just one item last year or last 2 years to this year. Don't forget, you cannot use 2 years to now. It's just supposed to be 1 year. Therefore, theoretical sake, sometimes it's just nice to have these things because these are the numbers that guides the decision that influences you. Do you get me now? Because see, although Nigeria is not really a credit
driven economy,
but it still affects us because any business decision you want to make now, you require credit, you go to your bank, these things drive your decision. Right? Exactly. Because everybody's financial institution is looking for how to collect money at a lesser rate and give it out to still make some income.
Correct.
Exactly. So when you look at it, so inflation guides the MPC's decision. Do you get it now? Although it's not just inflation. Although the major CBN is what? To help, so CBN's objective is to help ensure that prices of goods remain stable. So tie it back to inflation, right? But so inflation now at 15.06. If it continues to decline, we see the MPC come to cut rates or adjust more the parameters they use in keeping the economy stable.
So in the long run, what you're saying is that in the long run, it will finally begin to hit the common man on the street. In the long run, it might take a while to trickle down there, but in the long run, it will hit. I think one of the things that also destabilized, that started making people think differently is also the war. Because of the cutoff from crude, but I don't want us to go into that. But really, that has really affected it.
So,
if that Iran and what's it called, and if the Israel, the United States, and Iran wasn't happening.
Yeah.
I think it will, at least pump price won't have gone up.
Yeah.
If pump price hasn't gone up, prices of food would have remained stable, right? So I think that also kind of affected.
Yeah. So it actually affects because now everybody has to change their outlook.
Yeah.
For the year.
Yeah.
When we're doing
Yes.
your strategy reports you're like, okay, at the beginning of the year, you to be high. Before you to keep declining. They see the election threats ahead because election is early next year, right? You see the election threat ahead. Well, normally, it used to decline, but now, even me myself, I'm like, the next inflation reports it might not be so good because you have to take into factor how fuel prices has increased by over 50%, if not more.
Things you should look out for as an investor when trying to take decision.
So inflation numbers. So even though you don't understand a deep dive into it, look at it month on month. Have you seen it?
How do I have access to those numbers? You can talk to your banker, your fund manager.
So it's even on we have it on CBN websites, we have it on MBS. So the institution in charge is Nigeria Bureau of Statistics.
Okay.
Right. So we have it there also. So they get to release these numbers at all times. Then even Comercio also releases
Yes,
it. We have
thank
a
you.
newsletter that we publish.
Gives you every
try to break it down what caused inflation to rise actually. So immediately the report is being released. I mean, immediately we get the inflation numbers. Our research team does a great job to drive down into it and talk about it, right? So I feel like that's also a good way avenue. So you cannot check it. Okay, where were we before? Where are we now?
And also look at the results from the MPC, right?
Yeah.
How do you get results? Okay, I think our research team does a wonderful job, and we send it to all our clients. So please, if you've not registered to be subscribe to our research newsletters, please subscribe so you can get these updates as it day hot. So you can get the updates, ASAP.
And we also add that to our YouTube channel, our WhatsApp channel, sorry. So if you're on our WhatsApp channel, you would also have access to these reports.
As it's dropping, exactly.
As they drop. So do well to please
subscribe to our WhatsApp channel. Yes. Thank you so much, Funsho. So I think we should just go quickly to the myth.
Yes,
we have
myth busting segment. So
he answered one already.
Yeah, NTB truly risk-free. I think you already answered that.
So when you look at it, so it's like a relative question. That's the best you can get. Any other company, so for example, our investment advisory arm, those are the guys in charge of raising capital for firms through equity or debt.
So let me just break it down. Those are the people in charge of raising money. Raising money for businesses, right? Either via equity, and when it says equity, looking for direct investors, people that just want to take a stake in that business, or via debt, where you just go to the general masses, do exactly what the government is doing with treasury bills, but do it for the privates, right? So,
yeah, exactly. Thank you. So sorry. So so any issuance they're doing for any firm or company, they ask us, they are considered as even more risky. They have higher risk. Even the too big to fail companies
sometimes fail.
So even those ones, you still have to charge a premium over what the NTB is offering. If they're looking at the short-term instruments.
Very correct.
Then you're looking at can give my money out.
As I said,
and they also their source of revenue is quite robust and the prints currency.
So just to add to what you were saying,
the most important thing is last. They'll go and print more money today.
That's all Uchi.
That's all Uchi's holding on to.
Yeah, last, we'll go and print. So you also look at it back there. Are these guys actually default?
I think in a silent way, one of the major risks of any investment that you're looking at is credit risk.
Yeah.
So you're looking at, can this person pay me back? And once you can answer that question, you always see that reflect in the return.
Yeah.
In the yield, you see that reflect in the yield of that particular outlet. So this also gives you a fair idea of how to look out for Ponzi schemes, right? A lot of Ponzi schemes are still going to come out in Q2, Q3, Q4. And I can tell you that with my full chest. Because
one else now that will soon bust.
How do you know them?
Please don't call names here.
I pay attention to the names.
So now a lot of Ponzi schemes are going. And how do you know it's a Ponzi scheme? Look at the yields. Look at what he said about the issuing, our capital, called advisory arm, right? The handle raising funds. They ask for a benchmark. So use the treasury bills rate as a benchmark. Then you can use the rates on commercial papers as a benchmark. Once you see something that is beyond that, please just know that your credit risk is very, very high. There's a possibility that it might not pay you back. So now we're saying treasury bills is doing 16.
To add to
It's doing
16.
16%. Sorry, you're saying treasury bills is doing 16%, right?
Yeah.
You see some commercial papers do like say 17, 18. So maybe some very the higher maybe you see some even do 23% gross. That's about 21%. You see some do as high as 21% gross. Now, if you see someone that is offering you funds and say, give me your money, I'm going to give you at 30% net, which is about 32% gross, right, per annum, then you should ask more questions. Just know you're taking a risk because that's that's giving you like almost, should I use your term, basis point, 15% higher than what inflation is doing. What basis point is that? 1,500. That's giving you 1,500 basis points above the normal levels. So you should be scared and you should ask questions. I just thought it was important to drop that.
Yeah, so to add to what she said, safety of investment.
Right? Don't take calculated risk. However, make sure your portfolio is well diversified, well allocated. So you can take a particular risk, maybe a 10% risk on your funds. So just know that 10% safety of investment is not guaranteed, but I can take it. But not that all your entire 100% is tied to something that safety of investment is not guaranteed. I'm sorry. I will help you clean you. Yeah, be aware. Don't let anybody lie to you.
Yes, be aware you're taking
Be aware. Look at what the example you also gave about the FPIs.
Yeah.
The FPIs are coming from their own countries where they have single-digit returns.
Exactly.
To take a risk on Nigeria.
When you look at yield on their own bonds, right? It's at 4%.
Thank
10
you.
Years.
10 years, 4%.
Then you come in, you're coming to it's just the currency. You're taking on the currency risk, right, and also the country's risk.
So it's a risk, and that's why we call them what? Hot money. So they are taking that.
Small shaking, what's it called? The last skip like this, they're out.
They're out. So it's calculated risk for them. So I think we should all think in that way when we're taking these investment decisions. Thank you so much, Funsho. Thank you so much, Yuki. I think that was so insightful. So what are other common mistakes retail investors make when reacting to interest rate? I think we just covered that actually.
So I think he has answered most of them. So the next one is high yield always a good thing for investors?
Yes, I said that one already. Double-edged sword.
You know, just imagine the inflation of a country is at about 50%, and they give you 30% yield.
That's bad.
Do you get it now? It might look like you're making so much money for yourself, but the value of that money is actually ridiculous.
Yes.
But quick question to add to that: is it possible for hypothetical now, a country is having 50% inflation, is it actually possible for the country to offer to set rates at 51, 52?
No.
You know,
is that even possible?
I don't think so.
You have to look at the feasibility of repaying that debt.
Yes.
So that you're not debt reading or you're able to repay it. Because
the economy is already crippled already. Would you want to cripple yourself?
Yeah, exactly. So what will tend to happen is the country will be in a negative real rate region. So the risk can just be pretty high compared to other countries.
Correct. Very correct.
But not taking it, let's match up. I don't think it's the best. So you can take it gradually and try to address the cost of that inflation. So you get yields, you get inflation rates to decline. Not just taking, you get me now? Because normally, you know, what this rate is supposed to just do is supposed to reduce spending. That's one of the ways it curtails inflation. Right? You say there's too much money chasing fewer goods. Right? Okay, let's reduce spending. Let's increase investment. Let's help people invest more.
So right? All the money in the system leaves the system. Yeah.
So they also try to reduce system liquidity. Right? So use the money circulating in the system. Right, to ensure that people are spending less. You're only buying necessary goods. At that point in time, you're buying less of luxury goods. You won't wake up and just be like, you want to buy a Bugatti, right? You're thinking of, let me invest this money, let me keep this money somewhere, right? Instead of you just saying, let me just wake up and I want to go and get. Yeah, exactly. So it's now more of necessary commodities that people tend to buy, right? And they are more interested in, let me invest. Yeah, exactly.
Sorry, also there's a myth. I don't know if it's a myth or it's a fact, right? But I'll just drop it here. And I think I would like us to have, I'd like to hear everybody's feedback. So there's something that we believe in our space. When you see yields in treasury bills and those yields are high, right? We believe that because the federal government is willing to pay so much to raise funds, right?
Yeah.
That means cost of, and you also mentioned something, issuing house comes to ask for those benchmark. Cost of raising funds has gone up.
Exactly.
So if cost of raising funds has gone up for both the federal government and large corporates, we also see that in the capital markets, as I'm talking of stock market, local stock market, we see prices unit prices of a lot of companies actually goes down.
Yeah.
Now it's going down because the cost of them raising money has gone up. So I can't be paying so much dividends. It's going to affect, I'm spending more money, right? Now, the flip side, we believe that when the yields are coming down, cost of raising funds have reduced. And at that point, you see business expansion and you see capital markets booming.
Yeah.
Right. So we always tell people that why it's very important to come to these sessions as well is you and have this information. You will know the right time to go into certain investment types. So last year, 2 years ago, was a wonderful time to have started buying equities.
Yeah.
You'll be doing like this now. Your shoulders will have been very high now. Last 2 years was a very wonderful time. I'm not saying it's not a good time to buy now, but to have gotten full margin and utilization last 2 years because treasury bills, commercial papers, cost of raising fund was really high.
Yeah.
But now you're saying that the capital market is actually almost, at almost its peak. It's actually very high. So even barrier to entry now, unit prices is not as low as it used to be. Which, if you're coming as an investor, it will be good for you to still buy, but hold for a longer period. You can't be looking at short term. So this information is very, they're also always very useful. But I'd like to know your thoughts as a trader on that. How true is that? Is it a myth, or can it be categorized as a fact?
So I think it depends on the line we're looking at it, right? So if I got you right, talking about how equities,
how it's linked to
how it's linked to yields.
Yes.
Right. So I think, so in my own view, right, so it comes back to how has equities markets performed before, right? So when you look at it, so it's different case in points, but there's always like a generic way to look at it. But sometimes you just need to take a deep dive into it.
Very true.
What's causing these companies to
very
suffer?
correct.
What costs risk to increase significantly? Right. So when you look at it from Nigeria point of view, we had exchange rates devalue significantly.
Yeah.
So a lot of companies that had foreign exchange obligations, they're taking significant hits. Imagine currency at 700 before, then you're telling me to come and pay 1.4. How do I charge these guys back? Right. So actually, we're not in a very competitive industry where you cannot just raise prices up significantly. Then you have to take the hit for that time being.
Yeah.
That's what happened in the Nigerian market. So that cost a lot. So Nigerian inflation was more of imported inflation, right? So that caused a lot of issues until it changing in better, turning better, right? So at that point in time, when I got to that peak, where the main issue causing corona was resolved, actually, right? So that was a very good time to start investing in equity.
Correct.
To say, okay, guys, this is costing these companies to suffer significant losses has gone. They should start making gains now. So you start investing in the equities market. But yeah, so equities market, I tell people, is high risk, high reward.
Correct.
So when people come to meet me, for sure, what stock should I buy? A trader. Tell them, first off, two things are assessed. It's your risk appetite and your risk capacity.
Yeah.
Do you get it now? So your risk appetite is more of, okay, how much do you have or you keep having? How much you have need for that money?
Yeah.
Right. So if you're the type that needs the money in the next 3 months, go and do what you have fun.
Thank you. I think I would take something you said here that was very spot on. Research.
Yeah.
Research. So even if we say, okay, this is how it works, so this is a general view, it's just a surface level. Still do your personal research. And he also said something. He said high risk, high returns. He said, and you also have to look at tenor, your horizon.
Yeah.
So if you're someone that wants to need your money in 3 months, please come to mutual funds.
Because I cannot guarantee you that whatever they might give to you, we give you. For example, look at the market. Last 1 month, it has been very quiet.
Yeah.
Right. Market seemed to now taking like, oh, we're not seeing little drawdown on lost stocks. Right. Yeah. So imagine I told you to go and invest there.
You'll be panicking now.
My money
What is happening?
10%. I'm like, I don't know. It's the market. But from a long-term perspective, I can give you analysis that giving all things being equal.
Correct.
So we keep reassessing.
Correct.
Right? Giving all things being equal, looking at this that I expect the market to see. For example, Nigerian markets equities is up like 28%. It's been about 28% year to date.
Very correct. Yeah.
Right. So if you had gone in there,
channel, you get all this information firsthand. Also, if you can, if it's something you're also interested in doing, subscribe to our research mails so you can get our newsletters as well. But if you subscribe to our WhatsApp channel, it's something you always, get at the tip of your fingers. Yeah, we took so much of your time today. We delayed the session for about 15 minutes. We apologize again. So we'll be trying to close like in a few minutes. But just before we close, if you had 1 million today, how would you allocate it across NTBs, mutual funds, and other assets? Practical.
As a trader, you are.
As a trader that you are.
Answer as a trader and answer as.
Answer the trader.
That's very important. That's very important because you must understand yourself.
Yeah.
And I'm still very young.
Okay.
I still have love.
I love that. Yes.
So any money I'm making now, I'm not looking to say, oh, yeah, this money is coming out. I'm retiring next year, and I'm looking for a salary per month. I can take all money and be like, I don't need this money immediately. But for you now that you're looking to need, you have need for the money soon. Your own case will be different. It's going to be a different ballgame.
Oh, sorry, should we use the word? Should we use 1 yard? That's how they talk now, traders.
I say 1 million. I'm like, is it for rice?
Should we use 1 yard, 1 billion? That's how you guys talk. 1 yard, 2 yards.
Yeah, it's just like you have to make sure that it's. I don't know. You're just sharing our code outside. But yeah, maybe you're in Uber now, you're on phone, you're just like, oh,
1 yard, 2 yards.
What's the market just say 1 billion naira? The driver will just look back. Are you sure that we will not carry this guy home? Exactly. So it's like
1 yard, yeah.
Market code.
So we've had 1 million. Now let's break it down to the barest, practical. I think you've given some hints. First of all, you'd have to look at your age, your years to retirement. Secondly, you have to look at your risk appetite.
Yeah.
Thirdly, you have to look at what's it called, your tenor, your horizon, which is also tied to your age, or you're getting 1 million.
For me, right? I consider myself as I like risk. I love risk.
You're a trader.
Yeah, trader.
That's what I do for a living. So when I'm trading for my own prop in the office, right? That's what I do for a living. Try to make good returns, calculated risk. So I'm in the market. I have good knowledge of the information. When information comes, I see them firsthand. The company listens financial, I see them firsthand. The government does auction, I don't see them firsthand. So I'm tilted more towards being a risk guy.
So you do 900 million in equities?
No, I won't necessarily say that. So first off, I'll look, okay, after the 1 million, do I have a portion I want to keep as liquid? So if I have a portion I want to keep as liquid, I keep that in money market.
Correct.
Let's say I want to have 200 for, okay, I have need for this money soon. I can always look to deploy the cash. Because, we're very lucky now in Nigeria. I'm not saying we're very lucky, but since now very fast, like within 1 day, they release your money for you.
Yeah.
Yes,
Right?
yes.
Just within 1 day, what you request for it,
correct.
you get credited. So, but in equities, you never can tell. The position might be in a drawdown already. You're
Yeah,
chopping
correct.
-10. Then you're not having to look. I go and borrow money and tell them, oh, I have instrument as collateral. who would believe you? Nobody takes equity as collateral now.
Nobody does it anymore.
In the days,
Imagine
a lot of people have
loans.
learned from it.
Got their fingers
Right,
burnt,
since the
yeah.
financial crisis, that
Yeah.
nobody should take equity as collateral. So a lot of people are just very skeptical about taking equities.
Correct.
So you get it now. So okay, then I keep like 200K as money market because I have need for that liquidity. Then okay, maybe for me, I'll classify mutual fund and money market in the same category because now they are offering very similar yield.
Yeah.
The only difference is now one could tend to mature. So you choose to roll over.
Correct.
The other one
It's open-ended.
yes,
Open-ended,
open-ended. Exactly. So then I'll allocate remaining 800K into.
Equities?
I'll be like, okay, guys, let's take our time. So I want to make sure it's quite diversified across different sectors. I don't just go and put into one company. That's me taking concentration risk. But I make sure it's quite diversified. Okay, buy across the sector. I'm not going to give names.
No, you don't want to.
Exactly. So I just make sure I'm quite diversified across the first sector. Then maybe allocate it. So I could do like, it depends on my risk appetite. So if I feel like I'm more bullish, because sometimes as an investor, if you believe your portfolio money will not take.
You can take
You
it.
can't take it. And then that's why when I have the kind of money I have, I will still put money in portfolio management. Like, okay, you take this money. Because I feel like that's what I want to for. Take this money and be using it to make it like so you can have like different kind of equity mutual fund because they're different kinds of
Yes.
So have the because I think I'm taking risk. If I take it to my own end, then you take this risk. So I don't know, let's not look at it together. together. Oh, what could you return? What I could return? Because I could just choose to do 2 equity stocks. But that's too risky because I mean, it could end up. But you, to that extent, you should be able to diversify, taking pool of funds together.
Thank you so much. I think that's so practical because I think the word you kept on hammering on diversification.
Yeah.
So you also don't just think, oh, local equities, that's its own diversification. Even in the local equity space, there's diversity. You need to diversify. So some people are only buying banking stocks. Some people are only sticking to telcos. Some people are only sticking to oil and gas. Some people are going to maybe even in banking stock, they only buy one particular bank, and that's where the money is going to. You need to do the research and diversify. I think I really like that. You also want to say, even in the money market, even in the mutual fund space, you can also diversify to different mutual funds. But what about the mutual funds? Like mutual funds in itself are really diversified. So, for example, in the money market fund, you have commercial papers there. You have NTVs, and not just one NTV. You have different NTVs with different maturities and different tenors, which is good. So it is well, and the commercial is just 10,000 naira. So it gives you 10,000 naira full diversification. I think I really like that. That word,
Mutual fund is an opportunity that a lot of people don't
take advantage
of because you know you could be in tech, you could be in different workspace. Your money is making money for you.
Correct.
And you are not doing any work.
You're not doing anything. You're not doing
Are you serious? You don't have to ask much more about the market. So just so good. And the cost of entry is very minimal. See, your potential manager will get CFA so that you can make sure that you are making good return. So all you just need to do is put your money.
Put your money and let them work for you. Yeah, go to sleep. And it's low risk. It's categorized as low risk.
And it's regulated by SEC, so you are protected. You are very much protected.
I think you have answered. You answered the last question I was going to ask. Go ahead, Yuji, please.
So no, he has touched on everything. So I think at this point we can call the session to a close.
Yeah, before we call it to a close, I think one question we went to ask was, what simple action should someone take immediately after the session? I think Funsho was just spot on.
Yes, he was spot on.
He was spot on. Go and open a money market mutual fund account. So you start. Just even start with that now, 10,000. Just go and open one. Do your research and just even.
Hey, one of the best gifts you can give your people is also a mutual fund account.
Yeah.
Especially for people who you think you've been encouraged to invest for a while and they're like, this money is just to run. I feel like this money is too small to invest because I tell people something. If you keep putting 10K into an account every month, the next 20 years, it might just be like a minimum amount I just put in. In the next 20 years, you know how much that could have accrued to because you're making interest on everyday investment.
Correct.
Yes.
Correct.
Right, and it keeps, so that is how to grow wealth. It's not important that you just wake up, you see 1 billion in your account and like,
Nigeria,
I want to invest. Any culture you've not imbibed might even be difficult when you see big money.
Correct.
When you see big money, your expense, I mean, before you know, this money, I buy one Bugatti here, I buy, before you know,
I buy one golf.
into even things that will take, that, so we call them liabilities.
Yeah.
They're not assets for you because they're not generating more wealth for you. So it's very important just to imbibe that culture.
Thank you so much. Thank you so much. Just to add to what you said, when I had my baby, I had someone give me a gift, and it was an investment gift for my child. And they said, okay, even though it was not a mutual fund, they said, Tao, go and buy XYZ stock for your daughter. It's long term. Take this money, it's for her. And I think that's one of the best gifts apart from
sitting and sharing
sorry, triggered, because I just went ahead and just bought that. So like you said, you can also buy this mutual funds. You can buy it as gifts. You have nephews, you have nieces, you have parents. You can buy them as gifts, and it makes a lot of sense because that money is working for them, right? So thank you so much, Funsho. Yuji, over to you.
Yes, so as Funsho said, the greatest gift you can give somebody is a gift that keeps growing, a gift that keeps on giving. And the perfect example is the mutual fund voucher. So you can gift your loved one, gift yourself a mutual fund voucher today so that you can have the gift that keeps on giving. So that's it for our show today.
Thank you.
We are honored and we've learned a lot from your So we are now mini traders, all of us. We now know their lingo.
Yeah, we know their lingo.
Yeah. So thank you so much. And thank you so much to our wonderful audience for sticking with us through the duration of the show. Those that of us that joined on YouTube, very big thank you to you guys also. We really appreciate. So we've come to the end of today's episode of Tuesday Morning Talk, where we help you build wealth over time. And take care to join us next time. We are live every last Tuesday of the month, so please join us. And you can also find past recordings on Spotify. Just search for Tuesday Morning Talk. And you can also go on our YouTube channel to see recorded episodes. Search for Commercial Partners, and you'd see the section Tuesday Morning Talk to watch our past episodes. Thank you everyone so much, and keep in touch with us and continue to keep building wealth over time. Bye.
Yeah, bye everyone.